Our next guest says to focus on the long run, though. Keep a close eye on dividends on this earnings season and also look to fixed income given some of these bond yields. Joining us today, Schwab Asset Management CEO and CIO Omar Aguilar. Omar, great to have you. How much of a salve can this payroll print be today?
Well, I think what we got from the report this morning is that we see what we called a little bit more normalization of the labor market. I don't necessarily think that we are at that point where we can say we're seeing exactly this slowdown that the Fed is looking for, but we clearly see the trend that is, doing its job of what the Fed is trying to put into place. When you put all these pieces together, the overall result is that the U.S. economy, it is in pretty solid condition.
When you couple it with what Amazon's saying about their quarter, I just wonder whether or not the pitfalls of August may be lessened here.
Well, I think, what drives a lot of the economy, what drives a lot of the earnings activity, as you pointed out, it's basically the consumer. And, one of the components of today's report ended up being that the real wages continue to be pretty solid and pretty good, which gives consumer a lot of confidence. And, consumer confidence translates into continued spending. And if you actually think a lot of what has driven the stability of the U.S. economy so far this year, despite all the talk about recession, is the fact that consumer spending continues to be strong, continues to grow in certain parts of the market, particularly in the service sector, and that a lot of that is related to the fact that employees are there. Employers don't want to get anything related to affecting their employees, and therefore it's pretty solid consumer spending that is reflected in the earnings results so far.
Yeah, Omar, I think it's notable that about 4/5 of companies have reported, and about 4/5 of them have beaten expectations in light of the consumer spending that you just mentioned that continues to be strong and the tight labor market. What is your outlook on a recession, especially in light of the fact that Fitch was really sort of pricing in or the expectation of a recession in the fourth quarter?
Yeah, this has been probably, the most talked recession that we have had in any history. I think we've been talking about recession, probably for the last 18 months. And I think the consensus that we have all come together is that we have been in this rolling recession, probably started in the middle of last year, with earnings recession, with housing recession, different parts of the economy and different parts of the markets going into that recessionary, environment where we actually now go into the other side. And I think, what we may see now is that we're in these rolling recoveries where we have seen the housing market being, back on its feet. We're seeing now that these may be the second quarter earnings, maybe the bottom of what everybody expects for the earnings to just recover in the next couple of quarters and so forth. So I think what we are looking at this, and probably the biggest risk we have in this particular outlook, is the fact that, liquidity and lending still need to be realized in the economy. I think what we need to consider is the fact that there's risk associated with, less liquidity in the market, and that still hasn't transpired into anything in equity or even bond market.